So, big fuss for golden pocket. I repeat, golden pocket. Now, everyone's talking about it. It's basically the 61.8% Fibonacci retracement, and it is very important. Okay, it is very important because it gives you a sense of an opportunity. There's a pullback, and lots of people buy the pullback. So, in basic technical analysis, right? Actually, guys, sorry, I have to put this closer. I think probably it's better this way. Yeah, let me just put it here. Okay. There you go. Whoopa. All right. So, in basic 101, technical analysis 101, are you looking to go into levels like the 38.2%? That's the 61.8. Those are the two levels. Now, other traders use, if the trend is too steep, then they use, I think it's a 29.8%. It means that you have sort of like a flag, a bullish flag, and the asset doesn't need to pull back much. So in today's video, we'll just go over those golden pockets. And also I will share with you a little bit of what you need to understand is happening in the year 2022 as far as what help or what may help the market to propel higher. Hey everyone, as usual, you know who is this. If you don't, if you're the first time visiting my channel, this is JR from the MSA community, the Market Surveillance Alliance. And what I do, as a lot of people do, people track a lot of what's happening at institutional level. But I had the opportunity to sort of develop my own proprietary algorithm, specific tricks that I'm looking into the allocation. Now, a lot of people like, okay, there's some kind of unusual activity. It's not unusual. Sometimes it's just whatever someone thinks may be doing. Sometimes it goes to be very well. So what I look to do is to pinpoint why they're doing, how they're doing, and understanding now the routes and the execution. A lot of people think like if you see a put option, it's bearish. It's not bearish. FYI, sometimes you sell the put, and if you're selling the put, that's actually bullish. I'm gonna leave it there, but just remember, there's misconceptions. A lot of people also think like, oh, I am gonna be rich. I'm just gonna trade weekly calls or weekly puts, and that's about it. Sometimes you can do zero to hero or whatever, you know, either you're a hero or you just go to zero. But all that depends. So I don't think you have to do it all the time. And if you want to have some more than consistency, capacity to kind of pull money, pull profits from the market on a weekly basis, or even sometimes twice a month to kind of have that extra cash, well then, and you need to learn a little bit of the strategies we use. So that's what we do at our community, okay? So enough said, and let's just go to basic ideas. First off, okay, look at this. Everyone has a piece of the action. This is the Wall Street Journal, and they have a section in their own website where they have data about the US 10-year Treasury note. This is very important because you're looking at the yield. This is the yield, and what we need to understand in the year 2022 is that we won this one under 3%. That's the target. I'm going to be very straightforward. You want this whole thing to be under 3%. And if you pay attention to what happened, I'm just going to show you a 3-year track. You see, we are at the highs all the way into 2020. This whole thing was very like under 1%. Everyone was happy. And money was sort of like easy coming from years when it was more difficult. You need to be more, have better skills to trade. But it was easier, a little bit easier. And this is where we have the boom of people understanding short flow, gamma squeeze, buy squeeze, all that thing happening thanks to Reddit. And in some part as well, thanks to, we actually have to thank Robinhood. They actually want to blame for that part of the action. So this is one thing that you have to pay attention. This has to be under 3%. Now, if I look at, and you can find this on Market Watch, Bloomberg.com, Wall Street Journal, anywhere you can give it a go. But if you actually use TradingView, this is the way it looks, and this is where we have to pay attention. The red line, as you can see, it's very important to understand because this is the high and sort of looks like this right here. We have technical analysis, pattern 101. This is the basic. We have one shoulder, second shoulder, and this is the head. All right, that's the head. head and shoulders. Now, this is a potential bear scenario for the US 10-year Treasury note, and that's good for us. That's good for the market, because the last time the market actually make a move, if you look at this, is June 14, and that was the low in the S&P 500. That's right there. That's super simple. Now, this is the whole thing. Now, look what it's doing. It's building the right shoulder. Okay, it's building the right shoulder. If that's the case, well, this is good. So this is why I'm explaining this. You have to understand that there's this whole thing, it's out there, what it's doing, and how it will affect stocks in 2022. Pretty simple. We are in a yield arena, and we want this whole thing to be under 3%. Levels I have, red line, the horizontal, that's the one from May, that's the left shoulder. The head itself all the way to the top on yields, but the bottom in the S&P 500. So if you actually are ready to fight the Fed, hashtag fight the Fed. People say, don't fight the Fed. No. Yes, it's time to attack. You have to defend yourself. Those old clowns, mummies, the mummy, it's not I should pronounce it correctly, the mummies, the mummy, Jerome Powell, I don't know if he actually has an IRA or IRA Roth. Who knows? They are protecting themselves. They are saying, well, we're doing whatever we have to do to protect the economy. Yeah, but the expense of what? I'm not calling that inflation has to be at 2%. I don't believe that. You may call me crazy. The comments are always welcome. If you're respectful, please share your views. But I don't think we're in a stage where, with the U.S. having 330 million people, we actually need to have 2% inflation. I think probably 4 will be acceptable, and 5 will be the middle of the range, where I think, not the middle of the range because it's higher, but I think that the range that will be acceptable. Remember, we don't have the same demographics in the U.S. Whether you actually look at negative demographics in Europe, the U.S. is still growing. And actually, eventually, one of the reasons I think China will not be able to surpass the U.S. as a whole is because they're eventually going to have a lot of trouble with demographics. But let's go back to this. Look at this whole scenario. Potential head and shoulders. Now, I'm looking for all the way back to 2.78. And this is actually when you look at, when you watch and listen to Tom Lee at CNBC, why he is positive, because next week we have inflation report, and inflation report comes lower, very close to 7. Again, that will be a massive surprise. Definitely the yields will come down, and although the Fed will be in position to raise 75 basis points, you will really have to consider that they may have to slow down. I'm not saying pivot. I'm saying slow down. Slow down your horses, Jerome. And this is because of what is happening here. So there's evidence, and I'm pretty sure Tom Lee and all those guys, well, at least Tom, that he's a perma-bull. I'm a perma-bull as well, only in the U.S. equity market. Then you absolutely look for 278, and then the magic trick in 2023, based also on what the VIX is doing, volatility index. Then you have to consider that we actually may have potentially a great 2023, and 2024 will be in the verge of really consider what will happen with earnings per shares, with everything is out there. The resilience of the U.S. equity market is impressive. Keep that in mind. And just to finish today's video, I'm just going to go over the Nasdaq. I will use NDX this time. Yesterday I cover QQQ, all the technology, the ETF. But today I just want to come with the golden pocket. So the way it works is everyone is talking about that one is because this is the way it looks, right? And this is what happened. So yesterday everyone was crying. Well, the week before everyone was crying. Nobody knew what was going to happen. And as of today, at the beginning, because remember, it's Europe time for me right now, at the recording of this video, everyone was like, okay, it's not going to work because you have that wick right there. But what happened is that the asset has to grab liquidity. So the next candle, we have a wick because it grabs liquidity, makes everyone think that, as usual, there's so many bearish right now. It will pick that liquidity and goes up. That's what we have. So from this level, 11,932, the week so far picked all that liquidity and now is green. Something really bad has to happen. I think Jerome will speak today. The client will open the mouth. But I believe that not just because of the golden pocket, but there's evidence that based on yields, this situation may actually come to present an opportunity for the Federal Reserve to actually have valid evidence to slow down. So definitely golden pocket, 61.8%. A lot of people think it's happening in, there's evidence it's happening in other assets, potentially in the S&P 500. But look at the Nasdaq. The golden pocket is nothing more than the 61.8% of Fibonacci. And that's a good opportunity that we are taking in consideration. We already placed a couple trades in MSI Live. That's where we're very active. We use our Telegram group to send voice notes. I send videos, and we track. We have 2 back-to-back opportunities where we have great chances with precise definition of entries and exits to grab 50%, 60% in LTHM. No one's talking about that name right now. It's a little bit of it's a lithium company. And then we took opportunities in Plug Power, ticker symbol PLUG. So look at the Nasdaq. We're right now in the golden pocket, but it's more than the golden pocket. I always think that in the year 22, yields matter. They do. All right, guys, thank you so much for watching, and never forget, someone always, I'm telling you, someone always knows.